Good morning, investors. You are now on KleverStock with me, Ainun Jarya, serving you the latest morning bell updates. Kicking it off with the opening bell updates on our local market. Bursa Malaysia rose at the open on Tuesday today, tracking Wall Street's gains after Nvidia Corp announced a partnership with OpenAI and pledged up to $100 billion in investment. At 9:10 a.m., the FPM KLCI climbed 3.65 points to 1,606.99 from yesterday's close of 1,603.34 after opening at 1,604.90. Market breadth was positive with gainers outpacing losers 214 to 102. Meanwhile, 271 counters were unchanged, 2,057 untraded, and 37 suspended. Moving on to local currency updates. The ringgit opened higher against US dollar on Tuesday, extending gains as market confidence was lifted by the government's firm policy stance following the rationalization of RON 95 subsidies. At 8 a.m., the local note strengthened to 4.1885 or 4.2085 against the greenback from Monday's close of 4.1945 or 4.2040. Now, Bank Muamalat Malaysia Berhad Chief Economist Dr. Muhammad Afzal Nizam Abdul Rashid said the RON 95 subsidy rationalization showed the authorities were taking a pragmatic approach to uphold fiscal discipline. At the same time, efforts are being made to ensure the risk of higher living costs does not erode customers' purchasing power. In some sense, it can be deemed credit positive as the measure allows the technology embedded in MyCard to be fully utilized as part of policy tools. Perhaps there will be more fine-tuning on how subsidies can be further rationalized, focusing on income levels. On that note, such a move can be constructive for the ringgit in the mid to long term. On Monday, Prime Minister Datuk Seri Anwar Ibrahim announced that the price of RON 95 would be reduced to RM1.99 per litre from RM2.05 through targeted subsidies under Budi Madani RON 95 Budi 95 program effective September 30th, 2025. Muhammad Afzal Nizam also noted that the US dollar index DXY fell 0.31% to 97.34 points amid mixed views among US Federal Reserve officials on interest rates. Atlanta Fed President Raphael Bostic, St. Louis Fed President Alberto Musallim, and Cleveland Fed President Bev Hammack were in the hawkish camp. Meanwhile, Fed Board member Stephen Miran, who voted for a 50 basis point cut at the last Federal Open Market Committee meeting, said the neutral rate is at 2%, suggesting the current monetary policy stand is highly restrictive. SBI Asset Management Managing Director Stephen Ince said the government's RON 95 subsidy, providing 300 litres per month to all Malaysians regardless of income, had effectively increased household disposable income. If less money spent on fuel, consumers have more to spend elsewhere, offering additional support to the local economy. This, combined with global US dollar weakness, positions the ringgit to continue trading on a favorable trajectory today. At the opening, the ringgit was mostly higher against a basket of major currencies. It rose to 2.8352 or 2.8488 against Japanese yen, firmed to 5.6595 or 5.6865 versus the British pound, but eased to 4.9420 or 4.9656 against the euro. The local note was also firmer against ASEAN currencies. It advanced to 3.2672 or 3.2830 versus the Singapore dollar, appreciated to 13.1822 or 13.2518 against Thai baht, and edged up to 7.34 or 7.38 against the Philippine peso, and was little changed at 252.1 or 253.4 against the Indonesian rupiah. Continuing with some local economic updates. Hong Leong Investment Bank Berhad HLIB said Malaysia's export momentum in August highlighted the impact of higher US tariffs and waning front-loading demand, although diversification in export destinations provided some buffer. It noted that shipments from China and the European Union (EU) continued to strengthen, offsetting part of the weakness in the U.S. market. The scheduled U.S. Supreme Court hearing on November 5 on the legality of Trump's tariff could provide greater clarity to global trade uncertainty. Nevertheless, downside risk to the trade outlook remain, particularly stemming from ongoing trade negotiations with the U.S. and potential semiconductor tariffs, as well as softer growth prospect among key trading partners. In view of these factors, HLIB maintained its 2025 gross domestic product forecast at 4%. Maybank Investment Bank Berhad Maybank IB said the key development in August was the fall in exports to the U.S., the first decline since December 2023. This followed the finalization of the 19% reciprocal tariff at the end of July, which took effect on August 7. We expect the choppy monthly external trade numbers to persist as U.S. tariff uncertainties linger amid risk of more product-specific tariffs such as semiconductors, a key Malaysian export to the U.S., and pharmaceuticals, which are currently exempted. Maybank IB added that the U.S. Commerce Department's investigation under Section 232 of the U.S. Trade Act on semiconductor imports launched in April 2025 is still ongoing. It said the findings and recommendations will be submitted to President Trump, who is also scheduled to attend the 47th ASEAN Summit in Kuala Lumpur from October 26 to October 28. Hope floats for clarity and positive news on semiconductor tariffs during his visit. Malaysia's export growth moderated to 1.9% in August compared to 6.5% in July, missing consensus expectations of 3%. Imports slipped into contraction at 5.9%, leading to a wider trade surplus of 16.1 billion ringgit. Exports to the U.S. plunged 16.7% following the imposition of 90% tariffs on August 8. And now moving on to corporate news update. Gamuda Berhad is poised for a new growth phase, with analysts expecting the engineering and construction group to sustain its record order book, secure fresh large-scale projects across multiple markets, and burden earnings visibility through renewable energy and data center ventures. The next 2 years would be critical, with job wins and property launches forming the backbone of its earnings trajectory. RHB Research noted that Gamuda is potentially looking at a target order book of 50 billion ringgit to 55 billion ringgit by the end of 2026. The research house said, assuming that its order book stands at 45 billion ringgit as of end of 2025, with an annual burn rate of 15 billion ringgit, the group needs to replenish 20 billion ringgit to 25 billion ringgit in new jobs during the 2026 to hit the target by December 2026. It said, we think that this is achievable as Gamuda is pursuing tenders totaling up to 50 billion ringgit. RHB Research also highlighted potential project conversions such as the Direct Sunshine Coast Rail Line, the Hunter Transmission Project, and the Capricornia Energy Hub, alongside likely rollouts of data centers in Negeri Sembilan. It raised its target price for Gamuda to 7 ringgit from 6 ringgit and 52 cents and reiterated buy on the counter. Similarly, maintaining its buy call on Gamuda, CIMB Research lifted its target price for the counter to 6 ringgit and 70 cents from 6 ringgit and 40 cents after raising its earnings forecast for Gamuda in the financial years ending July 31st, 2027 and financial year 2028 on stronger property and construction contributions, despite factoring in higher gearing from land acquisitions in Vietnam. It wrote, we deposit that Gamuda is emerging with a serious contender within the renewable energy RE market, underpinned by recent strategic collaborations involving solar Power Plus battery energy storage systems. However, CIMB Research did not expect any meaningful contributions from the RE endeavors in the near term, given that most of them are either at the early execution or planning stage. HLIB Research kept its buy rating on Gamuda with an unchanged target price of 6 ringgit and 88 cents. He stated that 2026 is shaping up to be an eventful year for the company, with several projections already lined up with high certainty of conversions. It added Gamuda maintains rolling 50 billion ringgit worth of tenders, providing sustained visibility for new wins beyond the near-term pipeline. HLIB Research also noted that Gamuda is targeting 5.5 billion ringgit in property stakes for financial year 2026, supported by mid-market launches in Malaysia, and noted Gamuda's position as the highest bidder for the Chencharu Close to government land sale tender in Singapore. Meanwhile, TA Research expected Gamuda's earnings momentum to remain intact on the back of a robust, outstanding order book and a healthy backlog of unbilled property sales, both of which provide solid revenue visibility over the next 3 years. It said margins could benefit from a higher proportion of domestic products, which offer better profitability according to overseas plans compared to overseas jobs. Reiterating buy, TA Research raised its target price on Gamuda to 6 ringgit 58 cents from 6 ringgit and 43 cents. CGSI Research also reaffirmed its positive stance with an ad rating and 7 ringgit and 30 cent target price, citing Gamuda's diversified presence across Malaysia, Taiwan, Australia and Singapore, though it flagged risk from contract award delays and cost inflation. And finally, wrapping up, we have major corporate developments and deals across Malaysia. Caddington Group Berhad has secured a 33 million Singapore dollar contract from a turnkey engineering specialist for works related to an advanced packaging facility project in Singapore. ITMax System Berhad subsidiary Southmax Syndrome Berhad has secured a 51 million ringgit 15-year contract from Majlis Pembandaraya Batu Pahat to provide a smart closed circuit television system. CBH Engineering Holding Berhad has secured a 31.4 million ringgit contract to provide mechanical and electrical works for a proposed data center project in Johor. And Telekom Malaysia Berhad is collaborating with Meta SoftBank Corp, IPS Inc. and PTXL Smart Telecom Sejahtera, TBK and NEC Corporation to develop the Candle submarine cable system, which will link ASEAN countries to Japan. And last but not least, VS Industry Berhad has fully redeemed the first tranche of its 200 million ringgit Wakalah program. Now that's a wrap for Moneyball Updates with me, Aina Jara on KleverStock. Thank you for choosing us, investors. Stay tuned for the next live coming soon.